Good evening, everybody. This is Jeff Scott. This is March 15th, 2015, and this is my weekend review. My contact information, hgsidoc@gmail.com. Title today, to bounce or not to bounce, that is the question. As I will show you, there are a lot of reasons to think that we could bounce, but as we've talked about before, one of these times we're not. And let's look at some of the clues and try and guess what we end up doing this week. As always, this is for educational purposes only. I'm a doctor, not a broker. I am not affiliated with any software company. Anything I talk about, I've paid for, and I talk about the things that I like to use because I like to use them, not because anybody pays me to. Trading involves risk, and you alone are solely responsible for any investment decisions that you make. As always, I always like to do a call out to the folks that I rely upon from how I built my trading style. I start with Canceling with William O'Neill. I'm sure all of you have read his book, How to Make Money in Stocks. If not, I consider it to be a fundamental reading. Morales and Catcher, money managers from O'Neill that have taken his steps further with pocket pivots, Bible gap ups. And just to call out that they've got a new shorting book coming out soon. Above O'Neill's book, and let me draw the pointer to it, is How to Make Money, is Ian Woodward and Ron Brown, the brains and power behind HGSI style investing. Hope to see some of you at a Palos Verdes meeting, which will be this week. We've got Alexander Elder with his multiple books and his partner Kerry Lavorne, great teachers. Learned a lot from them as well. John Person, written a number of books, been trading since the 80s. I'm actually going to talk specifically about how I integrate his style and his signals into my trading today. Thomas Dorsey, although I'm not a point and figure guy at heart, I am about comparative relative strength, and he does a great job of breaking down the market into instruments, sectors, and indexes based upon comparative relative strength and helping to find the best stocks, sort of what we do with HGSI. Van Tharp for position sizing, Colling for volume price analysis, and my buddy George Lee, best Canadian trader that I know. What I need on my desert isle besides a high-speed internet, I rely heavily upon TradeStation or Thinkorswim. I'll probably utilize them during this presentation. Whoops, sorry about that. I use Genesis real time during the day because it's my best for looking at the markets. And I'll show you perhaps some of the things that I saw on Friday that had me close out a lot of my long positions early after perhaps a fake out. Now we'll see whether the market bounces on Monday and continues what we saw at the end of the day Friday, but there's pretty clear sell-off when the Consumer Confidence Index came out Friday morning. For analysis, I use HGSI predominantly. I use EdgeRater. I use Seasonality, which we'll also try and get through tonight. Magenta was my software of choice. It's now called Seasonality Trader. I'll mention that later. And I use a number of websites. Seen this before, and as always, are we rolling over into Stage 4, or are we about to start another leg up as we've had a bit of a pullback? I think we're down on the S&Ps about 4% since the beginning of March after a very strong February. Where we are in this cycle matters because it affects what I do. When we start off a new run, it's buying stocks and calls, selling puts, covered calls, and bull put spreads. When we're about to sell off, I want to be doing bear call spreads, buying puts, selling calls, shorting stock, and buying contras. And if I don't know where we are and we're in this uncertainty, raising cash is always a good idea. If I trade smaller, and I often like to sell premium in periods of unknown. Make sure you know your news and your EPS dates. Last week, I didn't think consumer confidence was going to clobber us, but it came out so badly on Friday that it led to, I think, the sell-off that we saw. We're sort of in a weird time in the market. The Fed does meet this week. I'm not sure. We got a rate decision on the 18th. I'm not sure whether they have a comment, live comment, or just written comment. I know people are looking to see the verbiage around the rate raise. Think about it. Our PPI misses to the downside. Our employment is starting to miss to the downside. Our confidence is going to the downside. And oh, by the way, that's with cheap gas. The rest of the world is easing. Our dollar is rising. Raising rates at this point in time is risky because it will cause our dollar to go up higher. And although many people believe that it's the right thing to do because it really shows that our economy is turning around and is a vote of confidence in the economy, the high dollar will start to be an issue if you sell goods overseas. And frankly, if you have expensive housing in Florida and New York, two of the markets I'm very familiar with, and you want to sell them, it's going to become tougher if some of the foreign money dries up, although it's still the safest place for them to park it. The other thing to be aware of this week is earnings. Now, it looks to me like the earnings season is winding down. However, I see a number of the stocks that I was interested in showing up here. I see, for example, if you're NOAA is an IBD 50, Chinese money management company, that might be something that's interesting. BURL, Burlington Industries, is one of my favorite retailers right now. Zebra technology play, both before the open Tuesday. And you can look at some of your favorite stocks. We can make bad decisions. I think I said this last time. We may say to buy when we should have gone short, and we may lose money. But if we are not aware of our earnings, if the earnings come out and the stock drops, it's your fault. You need to know when the earnings are coming out. You need to get whatever edge you can to make money in this market. And one of them is to know when your earnings are coming out. Tonight, these are my intro comments. We're going to look at the market using HGSI, Edge Rater, and TradeStation. Then I'll do my routine top-down analysis, look at seasonality, see if there's any interesting plays in the next week or two, and then, as time allows, show you how I integrate person pivots in HGSI to quickly find great stocks. Seasonality Trader, for those that are familiar with Magenta Trader, this is sort of the surviving product after the divorce between the programmer and the marketer. Seasonality Trader, Eric at erichey.com, ERIC at ERICHEY.com. Eric can set you up. If you're a past Magenta user, he has some discount pricing available, and he can restore your old scans and work. If you need any other information, just email me at hgsidoc@gmail.com. And let's go and take a look at some charts and what I see in the market. So I always like to review and get a sense of what the market's doing. So I'm going to start by doing my group performance analysis. This is a test that I run in HGSI. I looked at a number of different groups, assuming that I bought them at the end of the day on Friday the 6th and sold them the end of the day on Friday the 13th, which could have been part of why this was a bad market last week. What would the performance have been? Now, the first thing I look for is the S&P 500, and I could see that the S&P 500 was down 0.86%. So as you'll see, small caps actually did better than large caps this past week, and the S&P was down almost 8%. Now, this here is, I don't even want to highlight this because that would be my unhedged positions, and it would also imply that I kept everything through the week. And I would say if you looked at my portfolio right now, it would look much more like my buy list and not the list that I had a week ago. But we'll go up and look at that. Growth stocks, HGS 100, the IBD 50 were both flat on the week, but outperforming the S&P. So where were the winners? And first of all, it was a bad week, I guess, but not for us. Look at how much black versus red. Clearly, there was a lot of positivity in our types of stocks. Big volume in an uptrend, up 6%. That's a scan that I built in HGSI. Top 30 relative strength with volume in MarketSmith, up 3.16%. Best of Woodward and Brown. Top 30 EPS with volume. Big O from HGSI with a DI Plus is an old filter that I got, which helps me find the same stocks that end up into the IBD 50. So you could see that there are a number of lists that we look at within HGSI, my top 5 from Smart Groups, which is basically a group inclusion filter looking at a number of the bullish Smart Groups. And even my list of potential buys in a bad week was up 1.8%, or 70% up. So, was it a bad week? Was it not a bad week? I had one day that was up a little. I had 2 days where I was up a lot, and one day where I was down a lot, and one day I was down a little. So net, it wasn't a bad week. And you can see in the stocks that I identified last week as buys, I'm not saying I took all of them and not saying that I sold all of my prior holdings, but our types of stocks are working. How about Indies and other things? Indies would be a sign of an impending potential market correction, and we look for a group of Indies occurring together, and you could see the last Hindi we saw was January 5th. If we're 30 days beyond that, I don't count it anymore. Now, I'll show you what's interesting is we are probably one or two new highs away from a positive Hindi, new lows away. Actually, yeah, I got that. Correct. I'm sorry. Get myself confused on my own. We're at 2.19% of new highs and 3.44% of new lows. If we were at 2.2, then we would have triggered the last box here, and we would have had a Hindenburg. And I reran this. I updated my files. I couldn't make it happen, so we did not fire a Hindi, but boy, are we close. From a bucketology perspective, we've come off the bottom, and we've started to have less stocks deeply oversold as we looked at last week, but we still have 2/3 of the stocks below the midline on the S&P 500, below the midline of their S&P 1500 rather, below the midline of their Bollinger Bands. When we look at the market summary, and we have a new, Chris moved things around, so we have the Woody indicator, which is really my buy-sell indicator here, is the third section over. And what you could see, we've left the beautiful mid to late February strong buy signal and gone back into chop and worse. And even though we had a number of kahunas to the upside on Thursday, we continue to squarely be in the red camp with a few yellows. So I'd still say I'm not looking pretty from a long side, but bounces have to start somewhere. This was sort of a disappointment because when I saw this run of the kahunas here, I had hoped that this would stimulate us to go back into green on the Woody indicator. It did not. From a seasonality perspective, there are a number of stocks that, and this is within EdgeRater, I'll look at Seasonality Trader before I finish, but there are a number of stocks, and we're going to look at GameStop because that's one that I like. We'll see if it's too late. But you could see these are all stocks that are 11 out of 12 years positive. I've got Quick Logic here, 20% return average, 10 out of 12 years positive. Sun Opta, 10 out of 12 positive, 12%. In fact, if I go over to this side, I can get an idea where some of the big returns are. Now, I want to find a combination of a nice return and at least 80% of the years being positive. So we'll come back to this later. EdgeRater has a seasonality function built in. It's actually quite good. People ask, which do I prefer? Well, I guess the best thing I can tell you, or simplest thing is, Magenta Trader was about $5,000. Best Choice is about $5,000. Seasonality Trader, if he sells it outright, is about $5,000. EdgeRater is $2,300, unless you go to a meeting where he gives nice discounts from time to time. And you get seasonality as part of a much less expensive product. So it's not as good, perhaps, as some of the freestanding, but it's actually quite useful. So right now I'm feeling that the market's still in a downtrend. I'm not real excited when I look at those markets or the buckets. Let's take a look at some of the other evidence. In TradeStation, I do a number of different things. So I'm going to look at a couple different things right now. All right. So Let's go to my elder indicators. First thing I like to do is look at the major indexes, and I'm looking for a couple different things. I'm looking at the high jump. At the highest high, I know there's high likelihood of a pullback. I'm looking at the color of the price bars and where the price bar is in relationship to the envelope. I know that from prior discussions that if the price bar is green, that means that the price is above a certain exponential average and the MACD is heading up. If the price bar is red, then the price closed below the exponential moving average and the MACD is heading down. You could still have a red bar heading up and a green bar heading down. It's the height of the bar compared to the prior bar. If it's blue, then it's not giving me a signal on that way and I'm free to do what I want. On a green price bar, I'm interested in going long or holding. I'm not shorting. On a red price bar, I could be short or hold. I'm not going new longs. I look for red dots really engaged with the price bar, and those are evidence of MACD divergence. And we see those here, and the market sold off. We see them here on the weekly, and the market sold off. And then this magenta bar here and this light blue bar or dot, which are clearly separate from the price bar, those represent person buy and sell signals. And if you just, for example, look at the S&P 500, you can see that these are signals that are reproducible and pretty good at calling swings in the market and in individual stocks. And we'll talk more about those today. So on the NASDAQ, let's start there. I've got a red price bar, weekly is blue, but it certainly tells me to be concerned and that, more, I'm not going to jump out and go long this market on Monday. Here is a target perhaps of where this market can drop to, more of that to follow. I see MACD divergences on the red. I'm in a person sell signal and I'm nowhere near the top on the high jump bars. We've had a sell-off. I look at the Dow. I see red. I see MACD divergences now gone. As we've come back on the weekly, we're in a person sell signal. The high jump's heading down. No reason to run out and go long the Dow or Dow stocks. The Russell looks better. A couple things that are different here. Now, these are Russell futures, but should be the same as looking at IWM. We'll look at that in a second, or at the TFs, or the RUT. I'm sorry. I could almost talk. Let me see. Some of the platforms don't give you the All right. Try one more. I have to remember what it is on this platform. Well, anyways, going back here on the mini Russell 2000, it's on a person buy signal. I got a green bar here and a blue bar here. So if I was going to go long, or if I wanted to look at where strength in the market is, it's clearly in the Russell and in small stocks, not in the perhaps larger stocks. Still MACD divergence concerns on the weekly, and we're at 83%. We're not at the highest high on the high jump. The IWM should look similar, and it does, so I'm not going to say much more about it. S&P 500, futures blue and red. So again, a little bit nice to see the blue here, but with the red on the weekly, I'm not going to run out and go long S&P related stocks. If I look at the cash market, you should see blue and red the same way. On a person sell signal, pointing that out. Semis were one of the bright spots in the market, and you could see a blue bar here and here, MACD divergence in play, but you do have a person sell signal, and maybe I can kill that to save some bandwidth here. Let me close that window. And let me just put in here XLV. This is an ETF for health, Spider, and you could see, if you want to know where the strength of the market is, and frankly, a lot of the small stocks, I think, are, well, a lot of the big moving small stocks are biotechs, and you could see that XLV remains on a buy signal on the daily, blue on the weekly. It's in a person buy, and whatever MACD divergences it had on the daily work themselves out. So there are sectors that are working, and a lot of places that are not. Now, I get a lot of questions as to how I use TradeStation during the day. So I do a number of different things, and let's see if I got it all in this. I have a number of indicator sets. I have my indicators that I have created, green candle lows, red candle highs, ISO failure, squeeze, mobile breakouts and breakdowns from a squeeze, pocket pivots, and Bible gap ups. These are the same types of indicators that I use within HGSI. In Radar Screen, I get real-time analysis during the day. The next set are a number of indicators from a guy named Jan Arps, and then I get to my person indicators. And the nice thing about the person indicators are it tells me trend on a daily, weekly, and I could even go to monthly, and it's given me the intraday signal, the daily trend, what my daily signal has been in before I got my intraday reversal, and I can use these during the market and looking for changes and things. The flashing ones means it's flashing today. So if I was to look at TSEM, let's go down into this view here. You can see that TSEM on this day, intraday, had a reversal. That's why it was flashing. And you can see the person buy signal. Now this chart looks a little funny. Let me see what's missing. I thought I had some other stuff here. Let's see. Yeah, let me see what's happening here. Yeah, okay. Let me go back to, I guess when I changed size, I screwed things up. So I've included a number of different things in this chart. I have a version of the squeeze that I've been testing out. This is similar to the John Carter TTM squeeze. I have an unbalanced volume with its moving average. For those that know that I like signals in HGSI, I have my top line would be Bible gap ups, pocket pivots, mobile breakouts, squeeze, PSAR color, force kahuna, and red candle highs and green candle lows. So I could see here that TSEM, Tower Semiconductor, which I may have interest in, is pulled back. I can see it's got a person buy signal. Its PSAR is green. And had I been looking at this one, I would have seen a signal back here where I had a Bible gap up pocket pivot. So I have found a way to marry the person signals, and we'll come back to this, to what I use from HGSI to help me find great stocks breaking out. So for the most part, during the day, I'm going to be monitoring. Now, I also make sure that I have my earnings indicator so I can tell who's got earnings coming out within the next couple of days, because I certainly don't want to go long unknowingly in the setting of earnings. At the same time, I don't want to be holding going into earnings and not know that earnings are coming out. I didn't say I wouldn't want to be long, would not want to be long holding into earnings, but I wouldn't want to do it blind. And that to me is the point, that you need to know what's going on. I actually stick a lot of stocks, and first of all, I look at the bullish and the bearish ETFs to give me a sense of what's going on in the market. You can see the green was on the bear except for the semiconductors, and that's interesting, junior gold miners. I look at the sectors on the daily basis, and a lot of the same signals can get on sectors. You can see we had a pocket pivot down on the spiders for energy, materials, industrials, and selected tech. So you can see weakness there. We got a squeeze in the financials. Then I have stocks that I'm looking at closely, and then I have what I call my tigers, and my tigers are a big list, and I'll scan them during the day, or this is scanning by itself during the day, and I might be looking for Bible gap ups, and you can see the stocks, and you see these Bible gap ups right when the market opens. As soon as you see the gap up right away, and then you see how close they are to making the volume necessity. I can look for pocket pivots up real time during the market, as well as pocket pivots down, and this might guide me to look at certain charts. I can look at stocks that have a MOBO breakout from a squeeze, and I can look at the intramarket. These popped up, and you could see some of these listed here. Or I could look for stocks that have various red candle highs, which would be a failed new high, and green candle lows. So I'm looking at my signals, and I'm looking for some of the person indicators during the day in a real-time basis to try and see what might be breaking out. Now, the other thing that I do is, from John, is a commitment of traders report. And what this does is he gives us out for free on his site, at least the data. I have it in TradeStation, but I think I've got it. I bought some of this from him. I'm not sure what you get in TradeStation by itself. So let's just look at something I think is very interesting. And what's very interesting, this is the S&P. Yellow represents contracts in the E-minis held by speculators like us. Blue represents contracts held by professionals like hedge funds. And red is the commercials, and these are people that are hedging their business. So we look at the relationship between yellow and blue. Now, if I go far back to 2009, and if you've seen this before, I apologize, and you look at during the market dump from 2008, 2007, 2008, and this is just a moving average, you can see that the speculators, the small specs who are us, were long almost the entire way down, and the professional speculators, the hedge funds, were actually short. Then prior to the bottom, the professionals went long and we went short. So we are contrarian indicators. So when we're long the market, it's not necessarily a good sign. Then, of course, since we're amateurs, the yellows, or the individual small speculators, we stayed short, and we didn't start to go long until April of 2010, so a whole year after the market turned. And of course, the big specs have been negative for some time. So let's look at where we are right now. And I think this is very interesting. And where we are right now, let me make this even magnify it one more time, is that the big specs have now gone negative again. And the small specs, which is us, are as positive as we've been on this entire run-up since March of 2009. So we have the most long contracts in the small specs, according to this chart, than we have had in the entire run-up. Now, does that make me nervous? Yeah, it might. And let's see. Yeah, I measured it. This one was what? I did look at this one, and we're higher right now than we've been. So something to think about, in that the small specs, who I would most closely represent the kind of traders that we are as long as we've been, and we're contrarians. Okay, now let's open up a HGSI, and I've got about 45 minutes more of time to go, at least 45 minutes before I have to stop. So in HGSI, I always like to go to the Woodward and Brown user groups at the bottom, and I like to open up Major Markets Plus, and I like to go to a T1 top-down view. This view basically ranks these instruments by mostly one-day performance, some 5-day performance, and a little bit longer with the 13-day force, but the heaviest weighting in this case would be Friday. No shocker, the strongest performer in the market is the dollar. As I mentioned, small stocks were stronger this week than some of the others, and you could see the small cap 600 and the Russell 2000 up at the top. Volatility also at the top. At the bottom, oil, and then the big stocks, the Dow and the mid caps, the S&P 100, S&P 500. So big stocks underperforming small stocks, strong dollar still concerning. Let's take a quick look at some of these charts. Start with the S&P 500, and bear with me a second. I'm going to try and open up my little drawing tool that I got last week. What's it called? It is... All right, well, we're trying to open up. Let's see if it opens up. Yep, there it is. Excellent. Let me move it off the chart. And let's see if I remember how to use it. So I usually start with going and looking at my webinar view, which has all my indicators in it. And we can make it a little bit bigger here. And you could see that looks like we had a kahuna on Thursday. And as I showed you earlier with the edge rater view, we had multiple kahunas on the indices on Thursday, but they didn't seem to reverse this market. My bongos are red, my mobile breakdown, there's no force or any of these things down here, pocket pivots, etc., because there's no volume on several of these indexes. So now let's switch this to just a moving average view, and let's just take a look at what we can see. So last week I was hoping that we would get a bounce, and let me just clean this off and take a look at what I was looking at. One thing that I've done several times, and I think it pays to go out and look at this view and to remember that no matter what we might feel on a given day about what this market is doing, that if I go from when this rally started to where we closed, or the bottom of the bar area, I see a market that's up 205% since 2009. So that's 6 years. That's about a 35 to 40% average. We've been in the midst of a major bull market. We can also see that we've only knifed through the 200-day moving average once in 14, none in 13. This is 12, 1, 2, twice in 12. This is the biggest pullback in this bull market, which was in 2011, smaller pullback in 2010. So we've really had a nice drive up with nary a major pullback. Let's look at where we are right now. And obviously the big question is, when does that stop? So if I start playing around with my drawing things, I mean, we could draw, Ron's much better at drawing than I am, some trend lines. And we could draw this trend line in. What does that trend line look like? Looks like a wedge. And we are at the bottom of this wedge, and perhaps we're at a place that we might bounce. That would be kind of cool. I had hoped see if this is going to work. I had hoped that we were going to hold in this area. And I picked that area, and I can't draw, but I picked that area because it seemed to be a confluence of some resistance in the past and the 50-day moving average in blue. Now, I'm not sure that my hypothesis is wrong, because I always expect some element of, so to speak, porosity. And we closed here right under the 50-day moving average. So where do we go from here? Well, worst case scenario, this rising 200-day moving average might be where we're going to go. I can look down here, and I could draw a line here and say that, we draw the right line, just get a couple of different targets put in here. All right, so what happens this week? If this area here holds, this could have been a false breakdown below support, and we might head back up. All right. If, on the other hand, this doesn't hold, I think this is our choice. I think pulling down to about 2010, where that 200-day moving average would be, is where I'd expect this market to hold. We'd start to get some of these levels here in play. And so perhaps we bounce, but if we don't bounce, this is where my downside target's going to be, in this area in here. And I think it's important that you all have to have your own targets, but it's going to affect what I do based upon whether we hold at this rising trend line here or if we break down. So that's how I look at the S&P. Let's quickly take a look at some of the other indexes. Let's look at the Dow, another one of the weaker indexes this week. And, the Dow's similar thing. It's living right here around its 50-day moving average, which would be a natural bounce point. Take a look at the NASDAQ. Not nearly as sick as the others. And this is that line that I think I drew on TradeStation, which corresponds to the 50-day moving average area and would have been my target there if this market continues to pull back. Is this going to be a bottom right here? Let's just draw this line for what the heck. Let me make this thicker. Let me sit right here. Let me just draw this. That's kind of where I would have expected this to pull back. Perhaps it bounces here. Perhaps it gets down to the 50. But this is my target zone for the NASDAQ. Now, a bounce from here makes me happy because I still have some long positions. What about the Russell 2000? Kind of messy. Let me clean it up some. Russell 2000 looks pretty darn good, doesn't it? If the rest of the market does what the Russell 2000 does, Russell 2000 looks like it wants to go higher. So that's interesting, but it also corresponds with what we saw in my TradeStation views, where on the Russell 2000, we had a green bar on a person buy signal. My lovely assistant just brought me a glass of wine. It's so nice. Thank you. She's having a good laugh. All right. So that's the Russell strength there. Let's take a look at that dollar. Talk about strong. When's this going to stop? This is the dollar index, the UPP. And the UPP may not be the same as the future. But I can just show you that on the UPP, we are now breaking out to the highest we've been since 2009. On some of the future comments, I've heard 35 years, but suffice it to say, this dollar is in the midst of a major, incredible bull run, and there's a lot of potential issues that this is going to have on our economy. On some hands, it's great. Beat our chest. We got the strongest currency in the world. And everybody else is going to beat their chest because they're selling their goods to us and not buying ours because ours are going to be too expensive. So that's the dollar. If the dollar's up, we'd expect gold to be in trouble. Maybe gold is trying to put in a bottom here, but it's probably just another bottom on the way to further falls. If I look at silver, still looks like gold. Let me try that again. Looks a lot like gold as it's getting closer and closer to what was support before. So maybe we're getting ready to get to the bounce, or are we just in a wide trading range? Still looks very weak. And then if I take a look at the VIX, the VIX is, despite the fact we had a tough week, the VIX is below wherever I want to draw my trend line, and below the 50. So the VIX had a little bit of a move this week, and then it pulled back at the end of the week and bounced. Not much to say there. So summary to this point, market looks like it's under pressure. We are at positions that we might expect to bounce, but it doesn't have to bounce, does it? Let's just quickly look at the S&P 1500 created from the stocks, so I have volume. And I'm going to go up in here, and let's see if I can find what I'm looking for. These are some charts that Ian put together. Okay, so these are charts looking at, or Ron put together. S&P 1500, yellow on accumulation. We've got the green and the red's accumulation distribution about the same, but on the bottom of the range. You could see when we break out A through E that there's very few E's and very few A's. C's are the leading group. D's are heading up and B's are heading down. And price closed just right on the 22-day exponential moving average. A place that you might think might be a natural place to hold or bounce from. If we look at the relationship of the number of stocks in relationship to their 20, 30, 50, and 200-day exponential moving average. Short term, if there's a lot, we're way below our average. This means there's less stocks above their 20-day moving average than its moving average. But you look at the 200, we still have the majority of stocks are above their 200 days. So we're not in a world of pain yet, even though it may have felt that way. And I look at 5-to-1 in 10 days, and you could see last week we had 2 5-to-1 decliners over advances, 1 advances over decliners, and in this green thing, I guess this is a phoenix. A phoenix is the HGSI follow-through day to the downside, which after a sell-off can be indicative of too much exuberance to the downside. All right, so I'm not making myself feel real bullish yet about the market, but all it takes is a bounce off the area we're at, and as I've said several times, we are sitting very close to the 50-day moving average, and that has been a good place to bounce in the past. Then I mark down and look at my industry groups, 07. As you see, there's 176 of them. And since I care about recent, let's look at the last 2 days. I've got 38 to the upside. Last week I think we had 8 or 9 to the upside. So clearly improvement in this market, although still a tough week for the S&P. On the downside, I've got 44. So I'm no longer heavily weighted to the downside on my industry groups. If I push it back and look at a 5-day window, it doesn't really change much. Let's go back up here. And what I like to quickly do is take a look at what's here. And what do I see? I see a lot of healthcare. Specialty pharma, biotech, large pharma, generic pharma, managed care, healthcare facilities, life sciences and equipment, healthcare supply chain index. Note to self, healthcare is still strong. I see semiconductors, I see banks, I see airlines. What don't I see? Not a lot of energy stocks there, are there? Energy remains weak. Now, another thing I saw this week was that interest rate sensitive stocks started to move up, and you might see that with the strength of the REITs. If I look at force to the downside very quickly, what's over there? Autos, Some of the big banks are to the downside. The regional banks showed more strength, perhaps. Metals, tobacco, aircraft and parts, specialty apparel, steel, renewable energy, auto parts, life insurance, home improvement, casinos. Interestingly, I don't see a lot on the short-term look of the oil energy exploration. How about the 5-day down? Do I pick them up here? If I look at the 5-day force, so I'm looking at price and volume action over 5 days, you could see that the energy stocks over that window are weak. So if they're weaker over 5 days than over 2 days, it means they're starting to move back up, perhaps. So let's go to where the strength is. Let's just take a quick look and see if there's anything that looks buyable. So I do this throughout the weekend. I go through a list of stocks. I do top down and bottoms up. And I'll look at each one of these charts. And then if I like the chart, I right-click on it. And I put it into what I call my buy watch list. And then I go back and I review those during the week. So let's put my webinar view on this. Hopefully you all have got my current indicators and my current views. So I got my bongos on top, they're green. I've got my force, my accumulation is strongly A. My force indexes are green. Here's my high jump bar, nowhere near the top. I had a buyable gap up coming out of a squeeze. No mobile breakouts, this is group strength. Candlestick charts, I have an 8-day in magenta and then 8-day exponential, then a 17, 50, and 200. Simple moving averages. This is a relative strength versus the S&P, more experimental, so I'm going to hold it down. Then I have my pocket pivot window. I have my volume with OBV. These are Eurekas and Phoenixes. And this is my Kahuna window. So first chart is Great West Pharma, GWPH. This is a marijuana play where they're trying to make medicinal drugs from marijuana. Clearly is a speculative play. This is a stock that I've lost money on the past, and I don't think I've ever really figured this one out, but you can see a huge run up into 14. Of course, I probably bought it at the height. Pull back. If I'm looking at it right now on a weekly, a pullback to support, it's getting ready to move. On a daily chart, Bible gap up, out of support, everything is green. With the Kahuna, hard to ignore this one, and I will quick add to group, and I'll put it into my buy watch, which is already somewhat populated. I'll just add this one to it. Next one, whoops, too far, is Salix. This is undergoing buyout. Some bidding going on. I can't understand. I'm not an arbitrager. I skip it. We have a number of small biotech. When I mean small biotech, this is a company who's got a market cap of $2.4 billion. It does not make any money. These must be from licensing fees. Here's its revenue, its earnings. No PE because you have to have earnings to get a multiple. And what a great tight lower left, upper right breaking out on Friday with a Bible gap up and a mobile breakout. A Kahuna rising volume. Don't know anything about the stock. Love the chart. I wish it made money. There's a lot of these. Valiant does make money. This is one of the arbitrage plays with Salix. They've got a bid to buy it, and then Endo came in. It hit a peak up here where the red lines are and sold off when Endo announced its bid. I'm going to be careful with this. I have a long-term position, and I'm just going to hold it. My costs, I mean, the stock's 3 or 4 years old, so my costs are a lot lower. Ampio is another one of these. This is sort of late in the game here. It just broke above the 200 in late January, but breaking out, all green, AMPE. Another one of these makes no money, speculative biotechs. I am in Sempra. Don't know what makes this one any different, except I spotted it down here, and I've been in this one for a while. And this is a fast-moving biotech, doesn't make any money, no revenue. But again, what a tight chart, broke out here. Why would I have spotted it here? Kahunas, OBV breaking out, Bible gap up from the squeeze, everything turning green, and I've had a nice little run in CEMP. I don't usually go below the index. Quite a few nice looking stocks in specialty pharma. In the next group down, which is semiconductor devices, NXPI had a great week on earnings. They had been basing for a while. And come on, give me my chart back. Here we go. And you could see it had a Bible gap up, traded down, earnings came out, gapped up again, pocket pivots, nice uptrend. They also announced an acquisition. And I love stocks whose multiple is below their growth rate. I like NXPI, and I think it's already on my buy watch list. Micron is one that's in the midst of a sell-off. If I was expecting the market to go down, and it might, this is the kind of stock that if it rallies back up to the 50 as it did here, and it did here, I mean, we'll see if it makes through here. These are what we call ice hole failures, and in a stock that's rolled over, they've been shorting opportunities. Its earnings per share growth has really fallen off. I had owned it, and I'm out of it because I didn't like what was happening, and the stock has sold off. Freescale, I think they recently acquired somebody. Nice move up, broke out again on Friday. Not much bad to say about this chart, just to make sure that they're the acquirer, not the to be acquired. Cypress, they just merged with CODE. You've got a high base here, breaking out of a high base with big upsurge on volume, pocket pivots, the green. Don't like the numbers up top. I know there's a lot of positive thoughts about their merger with CODE. Skyworks remains a leader. This is a tight lower left, upper right. Pausing a little bit here could give you an opportunity to jump in. Look at this great earnings per share growth and their multiple. SanDisk sold off hard, broke above the 50, which could be an interesting place to start nibbling. I don't like the earnings per share growth. I like the stocks that I've shown you already. Universal Display, don't know much about this stock. I guess its earnings are about to go positive again. Not a tight chart by any means. Breaking out here, though, to recent highs. ISSI gapped up. I thought this was on acquisition news. Could have been earnings. And to figure that out, I could just do a right click, more info from the web. Let's take a look at FinViz. And FinViz tells me what? Sale of the company to a consortium. All right. I knew I heard that somewhere, so ISSI, I don't look at these things once they've been bought. And there's the index. And I usually go down through the top 10. I'll go through a couple more. Airlines. Last week I highlighted several of these getting into what I thought were opportune buy points. And you could see that several of them had nice moves. Delta was up 3.9. JetBlue was up 5.5. Southwest, which is one of the ones I like on the chart, didn't make the list here. We'll take a look at that. It's just sitting pretty close to its 50-day moving average. The reason why I like these as investments or trades, to me, right now, almost an investment, more so than just a trade. That's a story for another time, I guess. Is that these stocks that had big run-ups traded sideways. Here's American Airlines, not my favorite in the group. Delta looks just like American Airlines, great earnings per share growth, small PEs, and small dividends. Anticipated earnings per share of American of $8.42 in 2015, which is about 50% year-over-year growth. If the stock grows at 50, a couple of things. If you keep its PE at 8, then that's a $64 stock, so that's about a 30% gain from here. And if you're growing that fast, something tells me you'll get multiple expansion. Delta's multiple is 13.5. JetBlue is at 25, but look at the growth rates here compared to the others. In a great bull move, this was a good call last week, and it's starting to move back up. Copa is a South American. United Continental looks a lot like the others, sitting here right on its 50. Had a couple of kahunas last week. All it needs for me is some inertia and momentum to move up, and then I'm going to get interested. I love its earnings per share growth. Just for the heck of it, let's take a look at Southwest. Looks just like the rest. Had moved up on Friday. Didn't do much. I mean, moved up on Thursday. Didn't do much on Friday. Could be a false breakout. My guess is, looking at these numbers, that Southwest is going to continue to go up. So I like airlines. I like several of those, especially JetBlue and Southwest. And for disclosure purposes, I have pieces of both of them. Biotech remains red hot. It's sort of like pick yours. They're all over the place. The ones that are some of the hottest are the ones that don't make money. I'm going to go through a bunch very quickly and give you my basic commentary. BioMarin, modest revenue with some growth, good growth, doesn't make money yet. Lower left, upper right, expensive stock, broke out on Friday with the Bible gap up and a kahuna. You know what? I haven't added my earnings indicator. Let me add the earnings indicator to this chart. Like price, add indicator. Go down here. This is a new finding that we got this past week, earnings and revenue. Okay. And I don't want to see, I just want EPS. All right. All right, so earnings were back here earlier, so this was not an earnings move, so a big move up on BioMarin, BMRN. Here's Repligen, another low revenue, doesn't make, well, it's starting to make money, doesn't make much money, trades at a big multiple. Big move on Friday, everything's green, 2 kahunas in a row. That's interesting. It's a big move. It's a 6-point, 5-point move, 4.5-point move. Hard to jump in with that much of a move, 15, 20% on the stock. But something's going on with Repligen. Biogenetic, the big kahunas, and a pullback here. Could be setting up for a new buying opportunity. Regeneron, nice shallow pullback basing. Mobile breakup from a squeeze on Friday. Looks like it wants to run again. Avalanche, don't know anything about this. Love the pullback to support. OBV turned up before the price did. Mostly green up here. Doesn't make any money. I'd want to do some research. This looks interesting here. Avalanche, AAVL. Ariad, an oldie, but maybe will be a goodie again someday. This stock was in the penalty box when the FDA took the drug off the market. They put it back on. A lot of speculation now about a new CEO. If you don't think that matters, look at Amgen. It did nothing for 10 years until they changed CEOs. Here's Ariad. Ran up, pulled back. Looks like it wants to run again. Tesaro. I know the CEO personally, great guy. He used to be at MGI, did great for their shareholders. They've got a pipeline with a couple drugs getting ready to come to market, hopefully, or at least getting closer to come to market in the cancer space. Nice run up for Tesaro. These are getting expensive here. Pharmacyclics, this is what everybody wants to grow up to. They want to grow up to be a stock that languished down here until Ash of 2011 when they presented some data and the stock woke up. It's had a huge move up from the 15-20 range to 255 in 4 years, 3 years, and is currently a subject of a buyout by somebody, by ABBV. Seattle Genetics trying to come back from the, I won't say dead, but comatose, just broke above the 200. Group strength, doesn't make any money. Problem with the biotech is these are all story driven. Here's Puma, shallow pullback. Everything is green. It's a $240 stock with no revenue. Buy at your own risk. This is one I can't figure out, but I own. I own it because of its action on the chart. This stock goes from no earnings to major earnings. And I'm not talking small earnings. I'm talking about major earnings. And if it comes anywhere close to this, it's going to more than justify its price. I did some research. There were some acquisitions. They've got some CART drugs, which are up-and-coming cancer drugs. Must be some licensing fees that they're getting. But regardless, this is in a huge, tight lower left, upper right run. And that's AMAG, AMAG. Now, you could have just bought the IBB. And, you know, I like to kid with my buddy John Person. John keeps expecting, because this thing's had a run, a major, this is, I mean, let's just go to a weekly. What a run. Since 2011, you can paint wherever you want to paint your bar. Let's just paint the bar there and take it up to here. So in 187 trading days, it's up 306%. Nothing can maintain that growth rate. It's been led by the Alexions, the Amgens, the Biogen IDEC, the Gileads, the Regenerons. And now I think the reason why it doesn't roll over is as those guys, Celgenes and others, take pauses, some of these little guys like Avalanche, like Juno, like Kite have taken the mantra. So biotech has been great. It is extended. No way around that. Anything else here to mention? There's just a lot of stocks here. I own several of them. I like several of them. Most of them don't make any money, and that's a little bit nerve-wracking. Looking at banks, regionals have been strong, and they continue to be strong. We'll look at a couple of them. You know, you wonder who benefits from a rising dollar and rising interest rates. It's probably the banks. And you could see here Regions Finance is the leader there. And, you know, these are stocks that have been in downtrends and trying to get back to their 200-day moving average. On a weekly chart, it's really been sideways around that $10 range going back to middle of 2013. Many of these pay dividends. This one pays a 2% dividend. Signature Bank is an expensive one, breaking out after being in some consolidation. Here are the number of pocket pivots. Mobile breakout from the squeeze, all is green. But it's a very expensive stock. It makes money, does not pay a dividend. PNC Bank, I liked this one last week. It broke out. It makes money, but no growth. Pays a 2%. One of the things that I considered, and you might consider, is just buying the KRE. KRE is a ETF for the regional banks. It does not pay a dividend, but it should mimic what these do as a whole. And you could see these banks had a big move up on Thursday, and then Friday they sold off hard with the Consumer Confidence Index, but closed back near where it opened, sort of what John calls a jackhammer, and perhaps this will continue to go higher. Got about 15 minutes left before I'm going to be called away. So let me just go back to here. Look at a couple of the REITs. I think there's some M&A around Macerich, but several of these are on my buy list, so let's quickly take a look at them. So this is Macerich, pulled back to the 50, broke out, everything is green, had a pocket pivot, pays a nice dividend, has a major growth rate that's come into the stock, but it trades at a big multiple, 26 multiple. That's MAC. Simon Property Group sold off hard, bounced this week with some of the weak numbers suggesting interest rates are not going up. Good growth rates, pays a 3% dividend. General Growth Properties, similar, fell back until recently. Great growth rate, pays a 2.3% dividend. United Dominion Realty Trust pulled back to the 50, broke out with a kahuna. Mobile breakout from a squeeze, pays 3.2. You know, these are going to be interesting, and probably a lot has to do with what happens with interest rates, and that if interest rates go up, these things will become less attractive. But right now you can find a number of stocks setting up in decent buy points that have dividends of 2%, 3%, and higher. Under normal circumstances, for my own review, I would go through at least the top 10. I would look at a number of the downside groups, but in the essence of time, I'm not going to go through all those today. There are a number of things that I can do with an HGSI. One of them is called the group performance analysis, which I showed you earlier, to get an idea of what's working. Another thing I do is called a group inclusion filter, where I take some of my favorite smart groups and other groups, and I look to see which stocks are in the preponderance of those. And I came up with a number of them, and I put them in, let's see if I can find them here. So these are stocks that made my group inclusion filter. So let's run through them very quickly, and I'll make some more comments on some of these high-flying stocks, and many of which are probably owned by people that listen to my webinars. This is NXP. We've already talked about it. Nice leader. Ulta had great earnings on Friday. I don't get this stock, although it's starting to have some good earnings coming in. It trades at a high multiple. That multiple has come down over time. Does not pay a dividend. And since it sells mostly cosmetics and perfume, I don't shop there. Freescale, we looked at already. Valiant, we looked at already. Activists like Valiant is a serial acquirer. They recently won on Allergan. Nice lower left, upper right leader. No dividend. Has a growth rate in PE that are about the same. Continues to be a big acquirer in the space. Biogen IDEC, as I mentioned before, a biotech leader in pullback, could be setting up for another run up. Skyworks, leader we looked at already. Kroger looks like Skyworks, except it's a grocery store. Getting expensive. It's priced at multiple twice its growth rate. Pays a little bit of a dividend, but these have been leaders. Kroger's has been a great leader for some time, and except for a modest sell-off here in beginning of or the end of February, followed by a Bible gap up on earnings, has been really a straight shot to that upper right-hand corner. Allergan currently being taken over by activists. AmerisourceBergen. There's three companies that I know very well in the space of supply chain. One's Amerisource, one is Cardinal, one is McKesson. They're all different. I've worked for two of them. Think of them as holding the toll on the healthcare highway. And the more healthcare that's consumed, the more people are going to have to pay them for what they do. These companies operate small margins, but every medical supply, every drug that goes into a hospital or retail pharmacy is likely, or 95% of them are going to go through one of these three companies. And they're going to do a great job of logistics and moving the stuff to where it needs to be, taking out a very small piece. But on a, we're talking $1 billion, $100 billion of business, and a 1% or 2% margin adds up to a lot of money. ABC, what a beautiful chart, breaking out to new highs. It's expensive, multiple 24 on a growth rate that looks like it's slowing. Pinnacle Entertainment is a regional gaming or a smaller gaming company. Earnings per share growth sucks. It had a Bible gap up here, I think, on earnings earlier in the week. Mallinckrodt, this is the old Questcor, one of the biotech or specialty pharma stocks that's had a nice run. This looks just like Questcor did, and now Mallinckrodt's the owner. And you don't hear that much about Questcor, their product and insurance companies, since this takeover has occurred. Look at the growth rate for a biotech at a multiple of a third of that. I think this stock goes higher. Ambarella, they make the components of the GoPro. Unlike the GoPro, which has done poorly as a stock, Ambarella is breaking out to new highs, all green. Ambarella will make the chips. Other people will buy them from them, not just GoPro. GoPro will have the competition. Ambarella will service everybody, maybe. Jazz going sideways, trying to break out with mobile breakout, everything turning green. On Friday, right below the PSAR dot. O'Reilly Automotive. Auto parts in general have been tough. This is an auto part retailer going sideways here. Mobile breakup from a squeeze on Friday. Got to get above that PSAR dot. Could be one of my get on the plane and fly buys. Centene, we talk about this every week as I think the best of the managed care providers. They do a lot of government work, winners of Obamacare. And look at their lower left, upper right tight chart. If you don't own this, shame on you. These, or unless you're brand new to me. Cognex, Don't know much about these guys. They make money, high multiple, breaking out here. I don't like multiples of 35 with growth rates that are slowing down, but that's just me. Lanet Corporation, this is one of my biotech or generic pharma holdings. Made a lot of money on this stock multiple times. I talk about it all the time. It's an example that I use in my training that I do as this is my ATM. I keep going back to this. High base, it looks like it wants to break out again, although I'm going to set my stops not too far below that 17-day moving average because it had a failed new high on Friday. If this market gets any oomph to it, I think this will continue to be a leader. Abiomed, another healthcare device stock, great earnings per share growth. It's an expensive stock. I don't know how young this company is. It gets a huge multiple, and this is a stock that's been around for a while that did nothing, that's took it off over the last 6 months. Obviously, news or product driven, don't know much about it, so I'm not going to comment. A lot of the content providers, the media providers, this is great television, have had a move up the last couple of days, had good earnings here. It's got a shooting star here, so it looks like it's a little bit extended and probably coming back. That said, major earnings per share movement, multiples much smaller than the earnings. This might be something to watch, but give it a day or two for the overheating to go away. Another small biotech, New Link Genetics. They've got some stuff in the Ebola world, oncology world. A lot of people like them. Kind of loose for my taste, but at new highs, no earnings. Flowers.com, they bought Harry David, I guess. They're sort of the leader in the oops, it's my anniversary and I haven't bought my wife a gift yet world, whether it's flowers, fruit baskets. Look at the step up in revenue, which probably came from their acquisition here. Not scheduled to make any money, which is bothersome the next couple of quarters. Love the chart. I got into it not too long ago. Everything's green above 1-800-Flowers. EPAM Systems, IT Technology, sort of a flag position here. If it breaks above the PSAR, that might look interesting. Sakamo Pharmaceuticals, great earnings per share growth rate. Looks like it wants to take off. United Therapeutics, lower left, upper right. And that takes, these are the stocks that came up using the group inclusion filter. In my last 5 minutes, let me do a couple different things. I mentioned the person indicators. There are a lot of things I like about John. Now, not everybody has TradeStation. And although I tell him he's crazy for doing this, he has some of his indicators for free on thinkorswim. So he has, so if I put up 8KRX, and let's just put it into a, well, it's okay. This is a VPA chart. This is a stock that got killed. And if you see these yellow and blue, yellow and blue, yellow arrows, these are the PPS buy and sell indicators. And I use them in a number of different platforms. I scan for them, and they've really been a positive for me in helping to improve my portfolio return. You can scan for example, PPS sell signals. Let's find one. YY. Okay. So here's YY from a scan. Let's go back into my chart. Type in YY, and you could see a sell here. So I will be scanning the market looking for buys and sells. I've set up my scanner to even look at, let's see if I have it in here or not. Starting to look at in various, I got a lot of scans. So for example, I might look at biotech PPS buys within the biotech industry. We said biotech is strong. Now I don't necessarily know all these, so let's look at, well, that's Repligen. We already looked at that one, but let's just look at Repligen in a chart. So I could be scanning for these intraday, which is one of the benefits of thinkorswim. So well, this looks like an interesting play. We talked about it, had a big move. So I can scan for them, and they plot these buy and sell signals on the chart. In Trade Navigator, and I'm sorry for hitting you with all these different platforms, but I'm showing you what I do. It's what I do. I will monitor intraday multiple different markets looking for these buy or sell signals. Now, one thing I wanted to show you was around 8 o'clock or 10 o'clock in the morning on Friday, we got a consumer confidence came out that was awful. Ugh. All right. I went too far. All right. So the market looked actually pretty good at the beginning of the day on Friday. And right here would represent, tell me I just didn't do that. All right, that's okay. That's the 12th. That's Sunday, right? No, it's Thursday. So this is at midnight before the market opened. Let's just track what happened. I think I'm on, these are 5-minute bars. Let me just go to 15-minute bars here. Okay. Market, now I'm sitting here, it is 0145. That would be before the market opened. Now, what I wanted to show you, let's see if this will open up the chart, is that I got clear-cut sell signals on Friday at, that's at 5 in the morning, that's not 13, 14, 15, 5, 6, that I needed to get out of this market. And of course, I'm not able to show you what I was looking at. I don't know why. Maybe it was on the 5th. I apologize for this. This is something I was trying to do on the road. I should have, there it is. The market sold off a little bit before, it was up in the pre-market. It sold off. This was at 9:15 in the morning. And then the market traded up to 10 o'clock, and then I saw this print. And this print got me out of my long positions. And I get these person buy and sell indicators firing throughout the day on my futures, and I actually trade these signals. Now, one thing to note, we ended the week on the YMs on a sell signal, on the NYSE on a sell signal, on the weekly, and we've got a lot of sell signals on the daily. So a lot of concern there. Okay. So at this point, I've hit my time. I've got to actually go now, so I'm not going to get to the seasonality. I'll hold that to next week. So just in summary, as I entitled my presentation today, let me just go up to the top of that. To bounce or not to bounce, that really is the question. If we bounce, do we go to new highs? And if we don't bounce, how far? I gave you what I think are rational positions to shoot for targets. Next week, I'll spend more time on how I use the person indicators intra-market and as part of my portfolio of indicators. And hope you all have a great week, and thanks for viewing this. And I hope to see many of you in the P.